This is Secondary 3 Express e-learning assignment question 1, part B. So after we have prepared the income statement, we now move on to the balance sheet. The first thing that you must have is the company's name, followed by the statement title. In this case, it is balance sheet as at 30th June 2017. The first section is always the asset section, where you will first record down the non-current assets. In this case, we have 3 non-current assets. As you can see, office equipment was earlier affected by the additional information. Therefore, workings must be shown. Total up the 3 non-current assets and label this as total non-current assets. The next section is the current assets, where you will also have 3 current assets. Same thing, cash at bank and inventory were affected by additional information earlier on, so we must show workings. Total the 3 current assets together and you will have total current assets. Take your total non-current assets, add it to your total current assets, and this will give you the total assets of the business. The next section is the equity and liabilities section. We will first start off with the equity section, where we will have the heading owner's equity. We will start with the capital at the beginning of the year. In this case, this figure is found in your question paper under capital. But instead of calling it capital, we will call it beginning balance, 1st July 2016. Then you will add the additional capital, which can be found in your additional information. At the profit for the year, this figure is obtained from the income statement prepared in Part A, less drawings. Same thing, drawings was affected by additional information, so workings must be shown. And you will get total equity, or you can also call this ending balance. Ending balance, the date will be the last day of the financial year. In this case, it is 30th June 2017. After the equity section comes the non-current liabilities. In this case, we only have one, which is the long-term borrowings. However, we must still show a total non-current liabilities of $250,000. After the non-current liabilities comes the current liabilities, where we will have 2 current liabilities, trade payables and other payables. Show a subtotal and label this as total current liabilities. The final step is taking your total equity plus your total non-current liabilities plus your total current liabilities, and this will give you the total equity and liabilities of the company. As you can see, the total assets equals to your total equity and liabilities. So both these figures must balance.